ARKK used to fly high, arguably a little too close to the sun. The ETF was a smash hit with retail investors looking for the highest risk to reward possible. But the ETF got beat down immensely in 2022. A lot of people believe that Cathie really doesn't know what she's talking about, and although there may be some truth to that, it doesn't really paint the full picture. In reality, Cathie made millions of dollars off management fees for her ETFs while investors like your neighbor were left holding the bag. But does that really mean she doesn't know what she's doing? Some argue that although certain holdings in her ETF are questionable, the ETF was made to be exposed to risk since it is designed with innovation in mind. Some holdings, such as Zoom, which we just did a video on, have experienced a great deal of slowdown as inflation and interest rates took hold of our economy. Other holdings, such as Ginkgo Bioworks, are questionable at best due to their inability to produce any net income. Many of these companies that Cathie picks for the ETF have major risks surrounding their businesses, which is always a double-edged sword. Let's take a look at the cost average for Cathie's top 5 picks in ARKK. 4 out of the top 5 positions have sunk below her cost average. Tesla is the only stock out of the top 5 that she purchased with a cost average below the current quote. Looking at the chart, the $51 to $54 zone will be a key zone to break above. There are rejections that keep taking place off that zone, which acted as a previous short-term demand, also known as a break and retest.